Welcome to all our guests that have joined us this afternoon. My name is Buhle Sibanyoni from Legal&Tax, and welcome to our tax webinar. We definitely wanted to chat with one of our experts here at Legal&Tax. I'm joined by Mr. Johan Swart, who is Head of Tax Services at Legal&Tax. Hi, Johan.
Hi there, and please drop the mister.
You know, I always call you Meneer. Now, it's officially tax time. SARS tax season officially opened on the 1st of July and will run until the 23rd of November, 2021. And we've picked up on a lot of concerns and challenges faced by our members with regards to submitting their tax returns. Tax can definitely be tricky, and with so many laws and rules around income tax, it can be very difficult to understand. And so we asked Johan to join us, and we'll be just chatting about everything related to tax, and he'll walk you through everything you need to know about paying personal income tax. To all our guests, thank you so much for joining us. We do have a Q&A section that we've opened up to you, so you can type out your questions as we go along, and we'll then open up the floor for Johan to take questions and address all of your queries. Just to state before we get started, if you have any queries that we cannot address during this webinar, please forward your details to info@legalandtax.co.za. We also have a WhatsApp line. You can send us a message on 071-526-8527, and then also contact us via our telephone line, which is 0860 587 587. So without wasting any further time, let's get straight into it. Johan, firstly, there are a lot of frequently asked questions around tax, especially for, you know, somebody that's starting a new job and it's a new world for them. You know, we don't really learn about this in school. And I honestly feel that it should be part of the curriculum, you know, because once you graduate and you start working, it's also overwhelming and confusing. So just take us right from the beginning, explaining what is income tax and who is required to pay.
Right. Before we go there, I must tell you, I saw a very sweet thing on Facebook. It was this lady that said she was so glad she studied parallelograms in high school because it really helps her with parallelogram season.
Okay.
So when we start with income tax,
yeah.
Normal person under the age of 65, if you earn more than 87,000 a year, right, your employer will start deducting tax from your income, right? This is in accordance with the Income Tax Act, because the Income Tax Act simply applies to everyone. It applies to SARS, it applies to individuals, it applies to businesses, and it applies to employers. So what your employer is doing when they're deducting tax from you is not something illegal or something they suck out of their thumb. It is following an instruction from SARS, and that instruction involves very specific tax tables for a very specific tax year. So it's not just a random thing that just happens and your employer does sort of what they like to.
Okay. And this is pay as you earn, am I correct?
Or that's pay as you earn. It's the common name for it. It's called employees tax. Okay. And you follow employees tax tables, and there's a whole enormous rule book for employers, guidelines on how to deduct employees tax, on what type of income, how much, what is applicable, what is not.
Okay, great. And why do we have to pay tax?
It is the way that the government of the country sustains itself. The government has basically got no other source of income than the taxes that they collect, various taxes. So that would be income tax from people that are employed or businesses that are making profits, it's VAT, and it is customs duties. So all of these different taxes is where the government gets their money from to sustain the country, whether it's education or social grants. Defense force, doesn't matter. Everything the government does is sustained through tax.
Okay, great. And can you explain what is a tax deduction?
Okay. A tax deduction is something that you are allowed to deduct from your income on your annual tax return. And SARS will take that deduction into account, reduce your income with it. And if they reduce your income, it logically means that the tax that you're going to pay is going to be reduced. An example would be a retirement annuity. So say, for instance, I earn 10,000 Rand a month, but I contribute 500 Rand a month towards an annuity. Then SARS will deduct that, and I will only pay tax on the 9,500 Rand a month instead of 10,000.
Okay. And then what is a tax rebate?
Well, a rebate is just a fancy name for a discount. So in the Income Tax Act, there is just your normal primary rebate. And you get rebates as old as you get. So if you're over 65, you get an additional rebate. And if you're older than 75, you get a bit of an additional rebate. And then whatever medical expenses you had, or if you belong to a medical aid, that can also cause a rebate. And a rebate is something that is deducted directly from your tax payable. So if I go back to my example, say for instance, I earn 10,000 Rand a month. And the tax on that is 1,000 Rand a month. So that means my tax for a year is 12,000 Rand. And I've got certain medical expenses. And those medical expenses or medical aid contribution rebate that I get will be deducted directly from the 12,000 Rand that is payable.
Okay.
So to sum up, sorry to interrupt, sum up. A deduction is deducted from income and a rebate is deducted from tax.
Okay. All right. I'd like us to also look at the requirements or criteria, looking at both who is required to submit a tax return versus who shouldn't need to worry about submitting.
Okay. SARS says, if you have worked for one employer for a full tax year and you've earned less than 500,000 for that year, you do not need to submit a tax return. But the exceptions are as follows. If you belong to a medical aid that is not running through your employer's payroll, you must submit a tax return because it will be to your benefit. The same goes for a retirement annuity. It will be to your benefit to submit a tax return. But you must submit a tax return if you did not work for the full tax year, or if you changed jobs, or if you receive income, anything other than salary. So say, for instance, you've got a salary, but part of that salary is a traveling allowance. You have to submit a tax return. And there is no question whether there's an if involved anymore. It becomes a must.
Okay. And then on the flip side, who's kind of annulled from having to submit?
No one.
No one. Okay.
No one.
Okay.
If I should pass away, then it would be the executor of my estate's duty to submit a tax return. So say, for instance, okay, let's do a tax year. Tax year runs from the 1st of March 1 year till the 28th of February the next year. So say, for instance, I die in October. Then my executor has to submit 2 tax returns. One for the period up to the date of my death, and then for the estate, the period after. So literally no one. It is not death. It's not called death and taxes for no reason, because you can die and you will simply pass your tax problem on to someone else.
Okay. And what should I be looking out for on my payslip? How do I know how much tax should be deducted?
Okay, you should not be so much concerned about your payslip, but going back one step, I told you guys what a tax year is. Keep all your payslips for the tax year, so it will be from March till February the next year. And the minute that you get your RP5, it's always a good idea to compare your 12 payslips to your RP5, and the information should match perfectly. There should not be a deviation of any kind. So if for 12 months you pay 12,000 in tax, then 12,000 should be reflected on your RP5. If you made pension or provident fund contributions of 20,000 rand for the year, that's what should be reflected on your RP5. If you go to your pay slips and you earn 10,000 rand a month, then 120,000 rand should be reflected on your RP5. It's an excellent starting point for anybody and for everybody, whether you're submitting tax returns or not submitting tax returns, irrelevant. So make sure that your RP5 balances back to your pay slips.
Okay. You mentioned, having your IRP5. What are some of the other documentation that is required in order to submit?
Okay, that is a good question, and I'm going to jump forwards and backwards a bit. So say, for instance, you register for e-filing and you want to submit a tax return. Before you touch anything on e-filing or before you open your tax return, you start with your supporting documents. And that is your RP5. If you've got a medical aid, it will be a medical aid tax certificate. If you're contributing to a retirement annuity, they must also send you a tax certificate. If you are earning interest on an investment somewhere, they must also give you a tax certificate. And once you've got all of your supporting documents ready, that is when you open your tax return, because SARS would have pre-populated your tax return with certain things, but certain things not. So if you open your tax return, they will ask you a whole bunch of questions. And if you haven't got those documents in front of you, the risk of you submitting an inaccurate tax return becomes higher. And inaccurate tax returns has now become a criminal offense. So you do not want to submit incorrect information to SARS, no.
Okay. I definitely read about the amendment to the tax legislation.
Criminalization of minor transgressions. You might have forgotten to update your address, and they might penalize you, and they might decide to prosecute you criminally, which is absolutely insane. But how will you explain to SARS that you are not liable for a penalty? Because you did not, it's a fact, you did not change your address, and they might have penalized you for that. So how do you, motivate to SARS to write off that penalty when you were in fact guilty?
Yeah. So what sort of advice would you give to our clients, Johan, in order to avoid getting penalized?
Okay, once again, going back to e-filing, because there's very few people that still visit SARS to do a tax return. The minute you open your tax return, first of all, check that it matches your supporting documents. Check that SARS has got your correct contact details, your email address, your telephone numbers, and that your physical and postal address is correct. Including your bank details. Your bank details is also part of your income tax return. So make sure that the details that SARS has on the return is correct. If not, you can actually just change it on the tax return that you are busy submitting for that year.
Okay, great. Now I just want to chat about the e-filing system. How easy is it to access and utilize the system? Can you take us through how long it takes to register and just how user-friendly it actually is?
It's the simplest of things to register. You simply visit www.sarsefiling.co.za. You will click on register, and from there on you will, we just do individual tax. So you will click on individual. Please make sure you don't click on anything else. You will fill in your details, And SARS will basically immediately register you. They will send you an OTP, a one-time PIN, and you put that on in the system. It will show you where, and you will have access to SARS e-filing. In some instances, SARS may request the supporting documents based on your registration. So they may ask you to send them a copy of your ID, proof of address, and bank statement, just to make sure that the details you have given SARS is correct. On e-filing, you can access any information that SARS has got about you. You can access tax returns, you can access statements of account, you can access penalty accounts. If for some reason you require a tax clearance certificate, I know nowadays, especially in the insurance industry, they will not employ you until you tell them, but I am all sorted with SARS. It's called a tax clearance certificate of good standing. So you can even do that via e-filing. How easy it is to navigate depends. I navigate a lot, so it's very easy for me. If you only do it once a year, it's a little bit more difficult, but it is not that complicated. And of course, we are always there to help. If you're a member of Legal&Tax, non-members, if you get any other professional advice as well, professional advice is quite easy to come by, sometimes for free even. Once again, going back to the insurance industry, some of the insurers will assist you with your tax return if you are a policyholder with them, for instance. You can just check and they will check whether it's the case for you, for say, for instance, with Old Mutual or Sanlam or one of those places. But getting tax advice is not that difficult, and I always recommend getting advice before getting yourself into trouble, or if you struggle to navigate, for instance, SARS e-filing.
Okay. And now, given the effects of COVID-19, are people still able to visit the SARS branches, or is everything done digitally at this point?
At this point, digital only. Initially, they closed all their branches till the 11th of August. The latest notification on their site says closed until further notice.
Okay. Okay, great. And then what do I do if I receive an auto assessment? Is it mandatory that I have to complete it, or can I reject the assessment? Just take us through that.
Take back one step to what I said about source documents. Everything begins and ends with source documents. So you will open your auto assessment and you will check whether that auto assessment corresponds with your source documents. If it corresponds with your source documents, accept it by all means. If it does not correspond, you will click edit and you will be able to, well, complete a tax return from scratch. The nice thing about those auto assessments is the moment that you open it, even before you select edit, it will show you whether you owe SARS money or whether they owe you money. So I can honestly say, in our modern era of modern payrolls, if there wasn't something strange on your RP5, like for instance a traveling allowance, the chance of you owing SARS money is extremely rare. So the moment you owe SARS money and you do not know why, get professional help, because it means that somewhere along the line there has been an error. Maybe your employer made an error on your RP5, or there is something that you should have claimed for as a deduction that you did not. You can, for instance, get a taxable subsistence allowance if you travel a lot. I'm taking, let's use flight attendants for an example. They get a subsistence allowance, and sometimes it exceeds the limits that are not taxable. So you're going to have a taxable subsistence allowance on your RP5 and on your tax return pre-populated by SARS. So you have to submit a claim against that allowance. And that's why I say, unless there's something rare going on, the fact that you owe SARS should not really happen anymore, because the deductions on payroll systems, your tax deductions, has become so accurate that most people receive assessments that says you owe SARS 60 cents or they owe you 42 cents or something stupid like that, which is as good as a null return. So if you owe SARS money, get advice. There's something wrong somewhere along the line.
Okay, great. And now can you clarify what is the difference between a tax audit and a tax verification?
Let's start with the verification because that's very simple.
Mm-hmm.
So you got an auto assessment and you decided to edit it. So you changed it, you put in a whole new tax return. And then SARS asks you, please send us copies of your supporting documents. And SARS will simply verify that those documents matches the information that you have put into your tax return. So it's a very simple procedure. It takes about 6 weeks for SARS to finalize, more or less. An audit is a dog of a totally different color. First of all, if you are selected for an audit, it means it's an in-depth item, a specific thing that SARS wants to investigate in depth. And they will send you a letter of engagement, right? Not a ring finger engagement. I am engaging you as if I am going to instigate a fight with you. They will send you a letter of engagement and they will specify in that letter, we are not happy with the following items in your tax return. They will give you a description of the items. And then they will give you descriptions of the documents that they require for you to prove that those things that you've put in your tax return is correct. Bad thing about audits are, as long as SARS advises you that the audit is ongoing, there's no real time limit on it. So
Okay.
they can take 2 years if they want to finalize an audit. And while they are busy with an audit, so say for instance, I'm being audited for the 2020 tax return, and I now submitted my 2021 tax return, and I got a refund, they will withhold my refund until the audit has been finalized.
Okay. And is this a random selection where they just selected random who they want to audit?
That is what SARS says, but it's not always the case. There are certain triggers, things that will cause a verification or an audit. I can tell you, claiming extra medical expenses, for instance, on your tax return, almost always causes a verification because SARS will want to see those slips of your medical expenses because medical expenses have got rules attached that a lot of people are not aware of. Like, for instance, you can only claim expenses like it has to be a registered medical practitioner or a prescription issued by a registered medical practitioner. If I go to Dis-Chem and I buy myself some Vicks Active Plus over the counter, you cannot claim that expense as a deduction on your tax return. And that is why SARS verifies those quite a lot. An audit is actually a very serious matter. It means that SARS has picked up something somewhere, something has been red flagged. I don't want to insult anybody or get strange, but a few years ago, all motor industry people were literally red flagged, especially salespeople. Because if you work for commission, right, that's one of the items I suppose we are going to get to when we get to home office expenses. But if you work for commission, you can claim the expenses that you incur in the production of that income. You claim as a deduction. So you reduce your income with expenses, and with that reduction of income, there's a reduction of tax. So an audit is usually a very serious matter. It means that something somewhere along the line has alerted SARS to discrepancies in the way that people either handle their income or handle their tax, or a certain industry is transgressing certain things.
Okay. And how long does this process take, Johan?
Audit. Audit has got no limit, like I said. If there's an audit, maybe they want to finalize, let's take an example, maybe they want to finalize an audit on a whole series of motor dealers at the same time. So your audit might hang while they're auditing another 80 people at the same time.
Okay. Right. So you just mentioned home office expenses. Now, with most of us now working from home due to the pandemic, who is able to claim for the home office expenses?
Alrighty. The theory is as follows. If you work from home more than 6 months of the tax year, you can claim home office expenses. Just an outline or background on the rules. First rule is it has to be a dedicated office. So if you work from a dining room chair as part of your dining room or couch on your settee or whatever in your lounge, or like I've seen a lot of people do, they sit on their bed with their laptop, you cannot claim. It has to be a dedicated office. And what you do is you get all of your expenses together for those months that you work from home. Like, for instance, the interest you paid on your bonds or your rent, levies, rates and taxes, security, whatever. So you're going to have a whole list of expenses for 6 months. And let's say those expenses comes to 50,000 Rand. What you then do is then you say, right, my office is 10 square meters. And my whole residence, including my office, is 100 square meters, which means that you can claim 10% of that whole list of expenses that you have calculated, and you claim that as a deduction. It's not a rebate. SARS is not going to give you, in my simple little example, SARS is not going to refund you 5,000 Rand. They will deduct 5,000 Rand from your income and recalculate your tax. I mentioned people that work for commission. Now, these guys are allowed to claim more things because these things are really vital for them to earn their income. But I suggest for people, in this home office expense calculation that you've got, if you've got fiber or your internet and the costs are yours, please note the costs must be yours. If your employer reimbursed you for anything, you cannot claim it as an expense. But if those costs were borne by you, right, then I would include those costs. But you have to tell SARS or give them an estimation. In your calculation, you will motivate. You say, I am using internet for work, and I have got internet and fiber at my house, but I'm only using 60% of that for business because I've got kids, maybe that likes to play games or whatever after hours, or I watch movies after hours. So that particular expense cannot be said to be 100% for business. So your little office you've got at home is 100% for business, because what else are you going to do in that little office? You're sitting at your desk working. You're not spending time there in a recreational manner or for other purposes. So it's easy. And that is where the distinction comes in. With other expenses like cell phones and internet, etc., it's very difficult to prove to SARS what percentage is for business. And in a lot of cases, SARS will not allow those expenses because either your business ratio is, how shall we say, extravagant, or they are actually entitled to simply disallow those expenses and not allow them at all because you are not a commission earner. If you're a normal salary working stuff like most of us are, those expenses are reserved for commission earners, basically, or business people. And there's a specific section of the Income Tax Act, Section 23M, that says normal salaried people are very limited in what they are allowed to deduct from their income for tax purposes.
Okay, great. And you sort of touched on this in the beginning, but how will this impact the capital gains when selling your home?
All right. If we look at the example of just last year's mess with COVID and this year's mess with COVID, there will be very little impact, because when you do a capital gains calculation, you will tell SARS, okay, I've had this property for 12 years, and for only 1 out of those 12 years did I use my office or claim an office expense. So it's literally 1/12 of your capital gain that will be affected. People that work for commission, my other example, so I've had my property for 20 years and I have claimed home office for 20 years. Obviously, then that affects your capital gains tax calculation more, because, I mean, now for every single year, I've claimed 10% expenses for a 20-year period. So the influence is simply bigger, that's all. But I mean, for, like I say, our guys now with this COVID situation, little or no impact on your capital gain.
Okay. So are we able to assist our clients just to sort of, evaluate whether they qualify or not?
Whether you qualify or not, it's a simple question. Have you worked from home for more than 6 months of the tax year? First question. Second question, is it a dedicated office? Yes or no? If it's a dedicated office used for longer than 6 months, you can claim. Whether it's worthwhile, though, is another question. If you see the amount of paperwork that you have, like I said, and it's all your invoices. It's for the interest you paid on your bond or your rental and your monthly rates and tax and your monthly levies. And you have to have all of your source documents available. Like I said in the beginning, it's the beginning of all and the end of all is your source documents.
Mm-hmm. Okay, great. Johan, we have quite a number of questions that have come in. So I think let's just open up the platform to address these. The first question I'm seeing here, if someone missed their 2020 financial year, they couldn't file that year, and the person is required to file the income tax return during the 2021 financial year, are there any complications associated with that?
No complications at all. If you're registered for e-filing, you can open a tax return for literally any tax year. In actual fact, the first thing that you do on e-filing is you go to SARS correspondence and you get yourself a statement of account. And on your statement of account, it will show you which tax returns are required by SARS. And you can go back to 2007 or whatever. You can literally open any tax return or create any tax return that you need and submit. So although it's tax filing season for 2021, you can literally submit a tax return for any previous year.
Okay. I have another question here. How should I handle the following matter? If I pay a medical aid contribution for my mother and she's a state pensioner and cannot afford medical aid, I have my own medical aid. How do I claim for this? And how is the medical aid rebate calculated? Can I claim the monthly payment as tax deductible, and can it form part of my medical aid expenses?
Yes, you can. And we go back to the begin all and end all of everything. You need the source document. So you will need the medical aid tax certificate for, like in this instance, your mother. And you will need proof that that payment is coming off your bank account. So let's use this example and turn it around a bit. So say, for instance, you're giving your mom 1,000 Rand cash per month to pay her medical. Will make the situation almost impossible to claim that expense, because you have to be able to prove to SARS that that medical aid payment is being made by you.
Okay. And now going back to the home office expenses topic, how far back can I claim for? I mean, we started working from home back in March of 2020. Can I claim as far back as then?
Yes, because you must remember the tax return that we are submitting now is for the period 1st of March 2020 till 28th of February 2021. So that we are now doing tax returns for that 12 months. Yes, so if you want to claim a home expenses deduction, yes, it's one thing that I did forget amongst the home office expenses. You will need a letter from your employer confirming that you were required to work from home. And now, very, very importantly, they must also confirm why you were required to work from home after the hard lockdown ended. So, in other words, after you were allowed to go back to office, why were you still required to work from home? And they must motivate that to SARS.
Okay. And then besides the costs that you mentioned, for example, internet costs and telephone bill, can you give us other examples of what people can claim for? I see one question here relates to electricity bills.
I included water and lights in that example. Yes, so water and lights expenses. It's not just electricity bill.
Okay, so stationery and furniture and
whoa! Before we get to furniture, so in normal circumstances, right? You will get your municipal utilities bill, your electricity, your water, your sewage, your rates and taxes. So you include the complete bill in your calculation. Furniture, not even worthwhile claiming, because what you claim is you claim 15% depreciation on furniture for a full year. So that will make such a small difference to the calculation. And you have to have proof of purchase of all of those things. So I didn't buy anything new when we started working from home. Not that I have a dedicated office, but I mean, I didn't buy any new furniture, for example. If you had to buy a new laptop out of your pocket, you can claim 1/3 depreciation of that. If you bought out of your pocket smaller items like a printer, you can claim that in full. So your home office calculation is going to be two parts. You're going to have the part where you divide the expenses in accordance to the size of your office in relation to the rest of your house. But things like depreciation on your computer and stationery and printer and little things like that, obviously you reflect separately because you are not claiming 10% of those expenses. Those expenses you are claiming as you are putting them down.
Okay. Another question here. I'm currently working as an independent consultant. I do accounting consulting to private companies, and I understand that the payment I received will be taxed as an individual. I'm thinking of starting a consulting company so that all the consulting fees can be received as company revenue, which will be subject to 28% instead of me being subject to the individual taxes, which is likely to be more. Would you advise this?
Oh, I love these questions. This is an interesting one. Okay, now you must remember the first thing is when you start a company, how are you going to get your money out of the company? Because a company is a separate legal person, so the company will have to pay you a salary, even if it's just on paper. You cannot just take the company profit and say, but this was my salary. Otherwise, you haven't declared anything. So that is your first problem. Second problem is, when it comes to independent contractors, SARS says you have to look at the common law aspect of a contractor. So they look at the following things. First of all, you must have at least 3 employees of your own. It's not related to you. So you cannot put your mom or your sister on there as your secretary or your receptionist. 3 unrelated employees, right? More than 80% of the income is not allowed to come from one source. So you must have several clients. There must be no restrictions on the work you do whatsoever. In other words, the people that you work for must not have rules and regulations that say you must be in that office by 8:30 and you're only allowed to leave at 5. There's allowed to be no related benefits like sick leave, pension fund, medical aid assistance, or anything that, because that makes you an employee, means you're not a contractor. And also, very importantly, you must get paid by project. You must not receive regular payment. In other words, if I work for 2 companies and one gives me 5,000 a month and the other one gives me 20,000 rand a month in accordance to the time spent there, I'm not a contractor. I'm an employee of company B that pays me 20,000 rand a month. So those are very, very important things to consider. And registering a company, you must also keep costs in mind, because a company must have at least a registered bookkeeper or accountant. And every year, the company has to have financial statements drawn up by that registered accountant, because the company, like I said, is a separate legal person, and it has to submit a separate tax return to SARS, separate from yours as a director or shareholder. And you as director or shareholder must also submit your tax return, like I say. So you must think, how am I going to, like I said, how am I going to get my money, my salary out of the company? I cannot just take money willy-nilly, because it means that money I take is salary, and you will still be taxed on it as salary.
Okay. Another question. This person is asking, what impact does a resignation or withdrawal have from a retirement fund? Sorry, what impact does a resignation or withdrawal from a retirement fund have on your tax return outcome?
Okay, on your tax return outcome, no impact whatsoever, because before you receive that lump sum payment from your pension or provident fund, a tax directive is obtained from SARS. It tells the pension or provident fund administrator how much tax to be deducted, and that tax is a final deduction. So on your assessment, they just SARS shows it on your assessment as a matter of courtesy, actually. The calculation doesn't form part of your assessment at all. While we're on this subject, just a word of caution. Every withdrawal you make influences the tax on the next withdrawal from a pension or provident fund, whether it's just a withdrawal or whether it's a resignation or whether you are retiring, because the tax tables for lump sums are totally different from the normal income tax tables. And every withdrawal pushes you up the income scale. So if people are a bit familiar with income tax, we've got different scales of income tax. Starts at 18% up to 46%. So the income tax tables for lump sums are just a bit different. But a lump sum that I drew 2 years ago will push me up that scale for a lump sum that I get in this year. They are cumulative and they will go on forever until the day you retire. So you are creating a tax impact today that's going to have effect on your taxes on lump sums in future.
Okay. Right, I have a medical aid.
You said okay, like it's whether it's so simple. Cool, it's okay.
What can I say? I mean, we are here to make our members' lives a little bit easier. So let's not panic. That's why we're here.
Yeah.
So I have a medical aid query. This lady says, my medical aid is administered by my employer. How do I claim tax for medical bills I incurred outside the medical aid due to depleted medical aid savings? Which medical aid bills would I be able to claim for? Example, specialist consultation or prescribed medication.
Okay, we did cover this briefly. First of all, I would recommend everyone, even if you know you have to pay this certain medical expense out of pocket, still send it to your medical aid, because it gets added to the amount that they did not cover on your tax certificate. So it makes it a lot simpler to claim. There is space on your tax return to claim additional expenses. Like I said, it has to be, first of all, registered medical practitioner. Doesn't matter what it is. Psychotherapist, herbalist, they're all registered medical practitioners and the prescriptions issued by them. So those are the expenses you can claim. And like I say, once again, the begin all and end all, you must have your source documents, because SARS, chances are 99% that SARS is going to ask you for your supporting documents.
Okay. And if you were on a medical aid under a company for 6 years and cancelled after 2 years, you joined another medical aid, how will that affect your tax?
Won't affect your tax at all. It's the membership of the medical aid that gives you the medical rebate. Doesn't matter if you upscale or downscale, the rebate actually stays the same. Just a bit of background, SARS did this a few years ago, because if we go back to deductions, so say for instance, I am a wealthy person and I pay 46% tax, and I have a deduction against my income of a medical expense, right? It means that I get a benefit of 46% of that deduction, whereas a person that earns a lot less and they only pay 18% tax will only get an 18% benefit. So Saul said, we're doing away with medical as a deduction. We are changing it to a rebate, and the rebate is exactly the same for everybody, depending on the members of the medical aid. How many members there is, like a mom and a dad and 2 kids, you will get X amount of rebate. Doesn't matter how much you earn.
Okay. And if I do not have a medical aid, but I paid for my hospital bills in cash and doctor's visits during 2021, the expenses amounted to around 60,000 Rand. Can I upload these as proof of expenses on the SARS e-filing system? And can I claim based on these?
Yes, you can.
Okay.
You can. SARS will calculate, because additional medical expenses can cause an additional rebate, depending on the amount of the expense in relation to your income. Very important. This rebate, like I say, when it was a deduction or expense, it was a bit simpler. It's now a rebate. Where other things have got a ceiling limit with SARS, medical expenses has got a floor limit, which means that under a certain amount, it will make no difference to your tax calculation. So those medical expenses you're referring to at the moment, like I say, they've got a floor limit, and it depends in relation to how much you earn, whether that expense will have an influence on your tax or not.
Okay. I'd like us to look at the COVID-19 lockdown, where it was a hard lockdown and people couldn't, drive. And if someone had a car allowance and they obviously couldn't drive the required business kilometers, how will that affect, their claim?
It will obviously affect your tax negatively. There's no other way around it. There's nothing to say. The important thing with a traveling claim is always being, okay, first of all, you must remember it's over 12 months. So if you were not able to drive for 2 months, but your ratio between your total kilometers and your business kilometers is still relatively high, you might not have a severe impact on that calculation. So it depends on a lot of factors. But in general, the fact that you have driven less kilometers, right, may have a negative impact. Doesn't mean that you will owe SARS money. But say, for instance, you have gotten used to a refund of, use an example, 20,000 Rand a year from SARS because of your traveling allowance. Don't bank on it that you're going to get the same type of refund this year.
Okay, makes sense. And how does one ensure that they are taxed correctly if they had a salary adjustment within the tax year?
All right. All modern payroll systems work on an annualized basis. So, say for instance, in month 7 of the tax year, I get an increase. That payroll system says, right, from month one to month 7, I have earned 150,000 Rand. It will take that amount, divide it by 7, multiply it by 12. Now you've got an annual amount. Okay. And then it will calculate the tax on the annual amount and divide that tax again by 12 to get the tax for the 1 month. So yes, the new payroll systems are very, very accurate. If there's an increase during the year, your tax deduction will be adjusted for the full months to make sure that it's not under deducted.
Okay. And
if
then
you
in
make
terms
sense.
of, yeah, 100%. In terms of property, if I rent a property out, what expenses am I entitled to claim from tax? What income do I need to declare as well?
Okay, the income you declare is gross rental received. Deductions is interest on your bond. Please note, not the bond repayment, but the interest on the bond is the expense part. Levies, rates and taxes, repairs and maintenance, whatever expense you had to incur that profit, you can claim as a deduction. Except, like I say, the bond repayment, you are limited to the interest on the bond. That's the only thing that's a bit strange.
Okay. And then with regards to somebody that has 2 jobs or 2 sources of employment, please advise on, how do I claim? Like, what exactly do I need to look out for?
Those poor people that have got 2 jobs to make ends meet, or another example is, for instance, your spouse has passed away. Now you get 50% of your spouse's pension or a income from your spouse's pension fund, plus you work. I have got bad news for everyone involved in a situation like that. In 99% of cases, you will owe SARS money. Because remember, we talked about tax tables or tax scales. So now SARS adds both those sources of tax and taxable income together for the tax year. And that may cause a jump in tax rates, which, well, no one is prepared for. And 99% of those people owe SARS money each and every tax year. One example that we've dealt with regularly is healthcare professionals, because they work shifts. So they would work one shift at one facility, and they would work half a shift at another facility that needs people at that time. And just those 2 incomes that were added together caused them huge tax problems.
Okay. And then can you please, sorry.
So I was just about to say, in a case like that, please rather be prepared. Put of your additional income, take like, say, 20% per month, put it into a separate bank account or savings account to make sure that you've got money to cover your tax assessment at the end of the year.
Okay. Will you please expand on the interest on bond that can be claimed, and where does one get this amount?
Simple. You ask your bank for a tax certificate. Now, banks are geared up because there are lots of people, in our previous example, rental, that own extra properties. So all the banks are geared up to give you a tax certificate that specifies how much interest you've paid on your bond for the 12 months of the tax year. And if you are only claiming home office for a portion, you say, okay, I paid 50,000 Rand interest on my bond for a full year, but I'm only claiming for 6 months. So therefore it will be 25 or half of that.
Okay. And then is it quite a regular occurrence that you find incorrect details on your SARS forms? I have a question here stating that, what if you find details of an employer that you do not recognize on your SARS forms? How do you go about verifying and rectifying that?
No, if you find details on your SARS, on your tax return from an employer that you know nothing about, I've got, well, a little bit bad news. You will have to wait until the SARS offices are open. You will have to go to the SARS office and you will have to take with you an affidavit that says, I don't know these people from Adam. This is not me. This is not my money. Because there's been a few instances we've picked up over the years of identity theft. So now suddenly there's two Johan Swarts with exactly the same ID number, but hopefully a different photo, maybe a prettier one. And now I am sitting with a strange person's RP5 details on my tax return. So identity theft is a problem. SARS is aware of the problem. So, but that problem has to be addressed at a SARS office. And like I say, you'll have to take an affidavit with you saying, I don't know who company ABC is, never worked for them, don't know them. SARS will be able to trace information from the company's PAYE reference number. So say, for instance, I stay in Gauteng, but this company is in KwaZulu-Natal, and obviously there is a problem because I cannot just pop down for the weekend and go have a second job, or pop down in the evening quickly and have a second job. So then they are aware, but this guy is telling the truth. There is a real problem, and only SARS can change income details on your tax return. No one else.
Okay.
So it is a process. SARS will then try and trace that employer, have a conversation with that employer and say, look, this is a situation, but it is a very difficult problem to solve. I'm sad to say. Giving you a bit more background. So say, for instance, I was the wrongdoer in this instance, but I've left that company. So how is that company going to trace me and tell me, but dude, you've got a fake ID, and now we sit with this problem because a company or an employer, this is part of the checks and balances it SARS uses. All your RP5s must balance back to the amount you claim in your financial statement as a salary expense, and all the PAYE that I've paid over must also balance back to my RP5s. So if this guy now has disappeared, what is the company supposed to do with that income and with that tax that's been paid? It is an almost unfixable situation, which is really, really a bad place to be in.
Wow, sounds very serious.
It is.
Yeah. Okay, Johan, last question. If I get a regular salary, for example, 10,000 Rand per month, and I also earn commission, example, 15,000 Rand per month from the same employer, are these amounts lumped together from a tax perspective, or are they taxed separately?
No, they're lumped together. There is no such thing. It's called income tax. It's not called tax on salary and tax on commission and tax on business profit. It's called income tax. So everything is lumped together. But in an example like this, when your commission income exceeds your salary, so it's the biggest income item on your RP5, you can claim the deductions that you incurred to earn that commission. So if you had to drive to go see clients, or you had to use your own cell phone, anything like that, you can claim it as a deduction, as an expense. Therefore, the expense will make your income less, will make your tax less.
Okay, great. Johan, thank you so much. The hour just kind of flew past. I don't know where the time has gone. Your wisdom and your knowledge is astounding. I know you personally, so I know that you're very clued up, very tax savvy. I trust you, with all my affairs. And thank you so much for chatting to us. It's been so insightful. I'm pretty sure that all our members have learned a lot. Just gauging by the comments that I'm seeing here, everyone is giving us a big thumbs up.
It's a pleasure, and it's because I'm old and grey.
Yeah, that's why I said you're wise.
With time comes experience. Lots and lots
Yeah,
of time.
yeah. What is your final word for the webinar? What is your take home message for all our clients?
I'm going to use a terrible slang word. Don't try and jippo SARS. If you're renting out your back rooms, declare that income. If you're running a little spaza shop from your garage, declare that income, because there is such a thing as sour grapes. You think you are in the clear, but your neighbor is now upset with you because there's people walking to your garage to go buy bread at 10 o'clock at night. And they simply pick up the phone and they tell SARS, my neighbor has got a shop. People, whatever you earn, you declare it. If you made a profit, that is the fact of life. You've made that profit, be prepared to pay the tax on it. Because SARS penalties, if they decide not to do a criminal charge, SARS penalties starts at 100%. So it means if you would have owed SARS 5,000 Rand on your rental profit or on your little shop profit, you will now owe them 10,000 Rand on their profit. And those penalties goes up to 300%. So in the end of the day, you might owe SARS more tax than the profit you made on your little private endeavor on the side.
Awesome, awesome. Thank you so much.
Awesome.
Johan.
No, it's scary, but yeah, that's what you people must take away from this. Please do not jip SARS. Don't think you will get away with a trick here or a trick there or something on the side. Yes, you may for a year or two, but it will catch up.
Yeah. Okay, thank you, Johan. I appreciate
Big pleasure.
and appreciate you, chatting to us. And thank you to all our guests that joined us this afternoon. If you have any queries or you'd like to, chat to Johan further, you can contact us. We're available via WhatsApp, as I mentioned, which I think is the most simplest and most user-friendly platform. Our WhatsApp number is 071-526-8527. You can also call us on 0860 587 587 or email info@legalandtax.co.za. We are ready and get up to assist you all with your tax return submissions. So, get in touch. We're here to help you. We are a companion to all of you, and hopefully just to make things easier for you and make your lives easier. Until next month's edition, I am excited to chat to you next month. Thank you so much, everyone. I hope you enjoy the rest of your afternoon.
Have a good one, people. Enjoy.
Thank you.
Right. Bye-bye.
Bye, everybody.